Blackstone-backed Aadhar Housing Finance's 3,000 crore IPO will open for subscription on the 8th of May. The issue comprises of a 2,000 crore offer for sale, where the promoters, Blackstone, will be paring down their stake, and a fresh issue of 1,000 crore rupees. To learn more about the company and the post-IPO plans, we have with us Rishi Anand, the MD and CEO at Aadhar Housing Finance. Rishi, great to have you on our show, IPO KYC. So the first question is, tell us a bit about the history and the journey of the company. Because IFC was involved, this was a company incubated by the Vadhavans of Diwan Housing, and then Blackstone took over.
That's right. Thank you, first of all, Reema, for having us here. Okay, now let me give you a little background of how the company was started. So way back in 2010, at the behest of IFC, which is International Finance Corporation, a new company was born called Aadhar Housing Finance with the purpose of catering to the low-income segment of the society. So that's how IFC joined the bandwagon. They took about 20% stake in the company, and the promoter group took about 80% stake in the company. That's how the journey started. Now, given this background of IFC and the purpose of the company, we were for the first 5 years mandated to start and operate business only in the low-income states of the country. Hence, our birth state became Uttar Pradesh, followed by Jharkhand, Bihar, Odisha, Chhattisgarh and West Bengal. So that's how we operated in the first 5 years. And once we were close to the 5-year journey, that's when we started expanding to larger states of the country. And in about 2016 mid, we were available in all possible states of the country, barring South. We did not venture out in South.
And why is that?
Because within the group, there was a second housing finance company called DHFL Vaisya Housing Finance, which was operating in the southern market. And in early 2017, both these companies merged together. And in the mid of 2017, we became a pan-India player. So that's how the journey started. Then came a very important milestone in the journey of the company, which was post September 18 ILFS DHFL fiasco. The company was put up for sale. And the process started about October-November 2018. And in June 2019, Blackstone Group acquired 100% stake of the company. That's how today Blackstone is about 98.7% stakeholder in the company. 1.8% is held by ICICI Bank.
Okay. So what's Blackstone's plan, right? I think the big concern in the street is private equity players do not stay on with the company to perpetuity. They have a fund life, they need to exit. So currently Blackstone has a 98.7% stake.
That's
Post
right.
the offer for sale, it'll come down by approximately 15%. What thereafter?
Okay, I think you rightly said that when it is private equities, the fund life is not perpetual. The fund life for Blackstone investment stands at about 2030. And the way we look at it with the current offer on sale, as you said, about 15% is going to be off the charts. And the moment it comes to close to 50%, that's when we would need a lot of regulatory approvals and banking approvals. Since the fund life is till 2030, we don't see our current promoters in a hurry to go out in the market every 6 months or every 7 months. So that's how the plan is.
Okay. But is there any precedence in India or globally about a single largest private equity owner of a financial services company who's had to exit? We have PE players in many of the housing finance companies, but it's more segregated, right? It's not one single large shareholder. So just give us some guide plan, because the worry is that these PE guys will keep coming and selling shares in the market, putting a lid to the stock price gains.
So while you're asking that question, I am just scanning through the housing finance companies, and you're right, none of the housing finance companies has as large a shareholders as us. We have Blackstone holding about 98.7% shares. While there are examples of multiple private equities shareholding in multiple in single companies. So yes, but there is no precedence of one single large shareholder as you indicated. And since there is no precedence of the primary, there is no precedence of the secondary in how will they exit. And as far as your concern around, they coming back to the market every 6 months, as I indicated, the fund life is till 2030. Eventually, till 2030, they will have to exit. That's how it works.
Okay, completely exit by 2030.
That's the fund life.
That's the fund life, right? Okay, and when they go below 50%, they would require a lot of approvals from the regulators, from the banks that they borrow from.
That's right, because the 38 important banking relationships that we have, including the regulator, which is also our refinance partner, they would all need to be approached for approvals.
Okay. Is there a lock-in for Blackstone?
So the lock-in, the voluntary, there is obviously a regulatory lock-in when you go out in the market. Blackstone, as an indication of confidence to the market, has given 6 months additional lock-in of whatever was prescribed by SEBI.
Fair enough. Now let's get to the business, right? This is an affordable housing finance company. Your ticket size is about 9 lakh. You're present in 20 states. You have 487 branches. Now to the growth. The AUM growth of the company was about 16% in FY23, approximately the same even in FY21. And then in 9 months of FY24, the AUM growth bumped up to 20%. So what explains that?
Okay, so let me first give you a little flavor of what happened in 2023. The figure that you see of 16% is the correct number, of course. That's how our AUM grew. But if you recall, till about March 22, there used to be a scheme by the government of India called Pradhan Mantri Awas Yojana under the CLSS subsidy scheme. So we, on an average, on a yearly basis, used to get a subsidy of about 250 crores year on year. In March 22, when the scheme got closed, we at one shot, instead of 250 crores, got 750 crores of PMAY subsidy. The moment the subsidy comes into your system, your AUM drops by that amount.
Okay.
So this additional 500 crores that we got in FY23 is the answer to 16.5. If we were to adjust for that, our growth was about 20%.
Okay, so adjusted FY23 AUM growth was 20%.
Close to 20%.
Which has continued in 9 months.
In 9 months.
And in your assessment, can you sustain this 20% growth?
It's quite sustainable. There is quite a healthy demand in the market, so it's a sustainable growth.
Okay. But again, your peers are growing at a faster pace, right? So something like an Aptus Value Housing Finance grew at 32% between FY19 to FY23. Home First Finance grew at 31% between FY19 to FY23, while your average growth was 15%. Even adjusting for all the factors that you name, maybe it would have been higher, but it's still slower than some of your peers.
So I would, the way I would want to look at it is all to do with the size that you're taking from. For example, if I am to open the year from today at 19,900 crores, that's the December 23 number for us. Hence, the percentage growth is adjusted for that. While the names that you took, whether it was Home First or Aptus, they are at about 8,900 crore, 9,000 crores of book size.
Okay, so is size a hindrance to you growing at 20% sustainably?
No, so even at this size, at about 18,000, 19,000 crores, that's the current book size that we are operating on. We are growing at about 20% historically in the last 2 years. So obviously, size is not a constraint at about 20%.
You're raising a fresh issue of 1,000 crore rupees,
right.
out of which 750 crore will go in for lending and the balance for general corporate purposes. How will this bump up your ratios, your lending growth? And even if you could, talk a little bit about your branch expansion plans. You are the largest affordable housing finance player with 487 branches in 20 states. So expansion plans.
So so the way we look at this 750 crore coming in, we will definitely use for further expansion plan. At Aadhar, when we talk about expansion, we are already in 20 states and Union Territory. I don't think we have any other state to expand. The only two, I will not say states, but only two locations we are not present is in Jammu and Kashmir and northeastern states. And in the near future, I don't think we will be venturing out there. But where do we expand is a big question. Where do we use this money? So our strategy is very clear that we start going deeper in the 6 or 7 states that we understand at the back of our hand, where the asset quality is good and there is huge business opportunity. So we start going deeper in these locations.
Which are these 6, 7 states?
So indicatively, it can be Rajasthan, it can be Maharashtra, it can be Uttar Pradesh. Uttar Pradesh happens to be our birth state. We understand Uttar Pradesh very well. So these are the states we'll start going deep now.
What about...
And the journey is already started. Last year, we had about 91 sales offices, which is a part of our deeper impact strategy in these states.
Do you have a branch number in mind, a target branch number?
No, so I will not say that we will reach X number in about 3 years, 2 years time, but the way we look at it is close to about 50 odd, deeper impact branches a year is where we should be reaching it.
Okay, 50 deeper impact branches every year. Net interest margins. Again, just before the IPO, your NIMs have shot up to 9% as of 9-month FY23, which compares with 8% in FY23. In FY22, it was 6.9%, and in FY21, it was 5.8%.
That's right. So what happened in the 9 months,
What happened?
right?
What changed in the last 9 months? Because your peers have reported a contraction in NIMs because of the rise in borrowing cost.
So the way it is, I would want to give 2 or 3 answers here. One is, if you look at our book, 83% of our portfolio happens to be floating, right? Which means if I am getting an interest rate bump from the banks, I am passing it on to about 83% of my portfolio. That's exactly what happened in the last 9 months. So when the interest rate cycle was on the up, we increased rates for the customers to about 1.25%, whereas the follow-up increase on the cost of fund happened a quarter later, and that's why the difference in the NIMs. But a sustainable NIM at about 7.5%, 7% is what is very comfortable.
Okay. So NIMs are unlikely to sustain at current 9%. It should be between 7
So that was
7.5%.
one-off event because of, I would say, the delay in
Front-loading.
COF. That's right, the front loading of interest rate to the customer and followed by the COF raise.
Okay. You know, there's also an interesting switch in the way you've been operating. The contribution of salaried employees in FY21 was 63.8%, and now it's come down to 57.2%, while the contribution of your self-employed, the business
That's right.
has been going up. Is this one of the reasons why your NIMs have gone up? Because one would assume that self-employed people are a little riskier, and therefore you will be able to charge a higher lending rate.
No, so I would, there are 2 or 3 questions to your single question, but I'll try and give you an answer. One is that why my NIMs have gone up? No, it's not because of that. As I told you, it is because of, upfronting of passing on the rate to the customer. That was the main reason why the NIMs gone up. But as a strategy at the organization level, the way we look at it, because of a couple of things that has happening in the market. One is the salaried segment, it is seeing some contraction in terms of yields. Because of which strategically we are moving a percentage, 1% a year towards the self-employed segment. Why are we moving towards the self-employed segment? We've been in the industry for 15 years. We have now mastered the art of cash flow assessment of the self-employed category. That's why you call them risky, because you're not able to judge their cash flow. But since we've been there for 15 years, we've mastered the art, so we know it is a safe segment for us.
Safe.
So from an asset quality perspective, this is more or less same at Aadhar.
And your gross NPAs were 1.4% in 9-month FY24.
That's right.
And about 1.2% in FY23. Is this the range the company has been operating at?
Yeah, so that's the range. The way Aadhar has been working. What the way asset quality works is in the first quarter generally the NPAs are slightly higher because of multiple reasons. For example, one big reason is that you start. So we've got this. By regulation, we have a methodology of using SURFACE as an act. So when you use SURFACE in the first couple of quarters of the year, a certain process has to be followed in terms of legal due diligence, post which the delinquency starts coming down. If I were to compare the same number, 1.4% that you're indicating 9 months, the previous 9 months it was 1.8%. So we say we've improved the asset quality from where we were.
Okay, but is there, asset quality for housing finance companies also moves in cycles, right? Currently we seem to be in a good cycle where asset quality has been benign. But do you see the cycle, changing and, collections getting tougher or the asset quality deteriorating and gross NPAs rising anytime soon?
So while at the industry level, I agree with your point that, there are cycles around asset quality. In the 15-year journey that we've been in, the only time that we saw a little pressure on the asset quality was during the COVID times, and that was the time when the government of India came in with moratorium, etc. So there was a lot of support from the government of India. That was the only time in 15 years that we've seen.
So what were your peak gross NPAs? You've been with the company for 6 years.
So our peak gross NPAs have been 1.2% in March 23. That was the peak. So that's the kind of efficiencies that we operate in. Why are we able to maintain these kind of efficiencies? Because one primary reason is that entire collection mechanism that we operate in is in-house. We don't outsource any collection mechanism to any recovery agents across the country. We manage the entire collection mechanism in-house, right from the early bounce by the customer to various buckets to NPA, everything is done in-house.
Okay. Now, this affordable housing is a very, very crowded space. There are multiple listed companies too. While the opportunity size is huge, and CRISIL has said that it's 5.4 to 5.7 trillion by March of 2026. That's the opportunity side. How are you differentiated from the rest? And who, according to you, is your most credible competitor?
Okay, I think the major differentiating factor between the competitors and us, or the closest competitor and us, is our reach. Our understanding. So we are 20 states, Union Territory, 487 branches, which we reach out to about 533 districts out of the 806 districts in the country. And in terms of PIN codes, we are today at about 11,000 plus PIN codes out of the 18,000 PIN codes that we cater to. So I think at the end of the day, it is all about reach. It is all about the segment. It is all about what we want to focus. For example, as I told you in the beginning of the discussion, We have been a low-income housing segment company. We focus in the EWS, LIG segment. Today, even today, after 15 years of the journey, 74%, close to about 74% of our AUM happens to be in the segment that we operate in, which is EWS, LIG. We have not shifted focus. The DNA continues. So if you are focused, you have a pie of the cake. You know which segment to cater to. There is more than sufficient demand. There are multiple reports by the government of India, by the rating agencies, by other agencies which show on the demand side. For example, there was an RBI report which in 2019-20 which said there are 100 million unit shortfall in the country. Now, out of this 100 million, 95 million comes in the EWS LIG segment. That's where we operate. So that's the size we are talking.
Okay. Is this a very plain vanilla kind of business, or is there any part of the competition which is disruptive, according to you?
So I would say when you deal with the customer segment that we deal with, it is not a plain vanilla segment. Every customer's requirement is very different. So it is more tailor-made rather than vanilla. But when it comes to competition, I think competition also is learning the way to cater to the segments, because every deal is different. Every deal has to be tailor-made. And that's what we do. The 3 or 4 top competitors have started learning the art of the game.
Okay. You've been with the company now for 6 years.
That's right.
And as a CEO for a little more than 1 year. What's been the biggest challenge for you?
Okay, so while you're asking the question, I'm still thinking what has been the biggest challenge. We've got an excellent team. The company's been around for 15 years. At least at the mid-management and senior management level, we have people who are more than 5 years vintage. What bothers me more is 2 things, and both the things are related to attrition.
Okay.
One is, the book attrition that happens, close to about 7%.
What's a book attrition?
So book attrition is that I have a loan on my book today, and a competitor buys over that book, that particular loan, and it is also called as balance transfer. I think that is one big area of worry.
And how high is book attrition?
So we are today at about 6.5%.
Okay.
Annualized. Industry hovers around 7.5–8%. I think it is not only a concern for me or for Aadhar, it is a concern for the industry, because you are actually not creating new houses. What you are doing is transferring existing houses from one bank to the other. So I think it's an industry problem and not a problem for Aadhar. And I think the regulator has taken note of it. So that is one. Second is also to do with your frontline people, the people who go and touch base with the customer. Even their attrition has been a cause post-COVID. We've observed that people have started shifting industries. So we have a lot of our ex-employees who become entrepreneurs. A lot of our ex-employees who've gone and joined.
Competition.
Not competition, the way the data looks.
You're the largest player.
Yeah, but
so I'm sure there is a lot of poaching which takes place.
Yes, I'll come to that separately. But from an existing people perspective, they started changing industries. People have gone and started joining, Swiggy and Uber, etc. Okay. Now, in terms of poaching, yes, you are the largest player, as you said. You become the training ground for most of the competitors to hire. And we observed that in markets where we had monopoly and people have started coming later. But I think everybody has to go through that cycle. We've taken measures to ensure that we don't go through a bad phase.
I read somewhere BFSI attrition is 40–50%. Is that correct?
No. So the way you should look at attrition is what happens at the front end, what happens at the middle management, what happens at the senior management. You're right. The front end is about 40–50%. But that is further subdivided into what you regret a person going, which is about 15–16%. And the balance is where people, they come and they go. So that 15–16% is what matters.
Okay. Now, just one final question, right? Aadhar Housing Finance has been looking to do an IPO for a while now. 4 years, 5 years? How long has it been in the planning stage?
No, so I will not say 4 years, 5 years. 22 was the first time we got an approval from the regulator. And then
the work started before, right?
The work started in about 21.
Draft papers in 2021.
21, that's right. And post that, the markets were not very conducive, and then we took a call of holding it on. We've got an approval again, and now we are in the market.
What are you feeling? How are you feeling now?
I would say not only me and entire 6,000 employees of Aadhar are butterflies. Today is the first day of our interactions with the analysts and at the press. So, and the entire company is excited about the upcoming IPO.
Thank you very much. We wish you all the very best. I look forward to a lot more interactions with Aadhar Housing Finance.
Thank you, Reema.
Rishi,
have a good day. Thank you so much.